All right, let's take a look at SPX for the upcoming week and see where we're at. So if you remember on the last video, we looked at the JPM collar. These strikes may have been rolled a little bit, but the general, yeah, see this says 40-30 call, but we're actually at the 40-65 level. And then the 3600 put, they're long. So as you can see on the yearly, let me bounce this out a little bit so you can see the great trend line. Okay, so we need to break above this trend line if we want to be bullish, but I want to look at it on a smaller time scale. So let's go down to the year and we'll take a look at the daily. So remember when I said we were looking to target this imbalance, fill this in, and then see if we could return to this level here. That is 39.62. That's the level that I'd be looking at to see if we can reject. So just to put this on the screen here, we'd be looking to get short anytime in here. And we did wick up into that area right at the end of the day. And then we had a brief little pullback. So what we want to know is it time to get long and target this imbalance here to fill and then possibly run these highs? So there's a couple different strategies we can use to determine that. If we're looking at this from a Wyckoff standpoint, we could say, all right, right here is our preliminary support, and right here is our selling climax. All right, so if you have a selling climax, you would look to have an automatic rally, right? That's a AR, automatic rally, all right, creating a resistant level, which would be right here. And then we'd be looking to develop support levels. Okay, and now the support level can break through a selling climax. So we could say down here we've tested support, tested it again, and then we actually broke through. Now this could be a phase C, which would be your spring. Okay, now if that's the assumption that we're operating under, we would have our spring into another area of support, and then we would be looking for any sign of strength. So a sign of strength is a break of resistance, right? And then a back test of that level. So I would not say that we're in the D stage, because even though we've broken through, we need proof. We need to see price break above this level, back test it, and then go. Okay, now clear all that off here. Since that hasn't happened, let's go down into like the 20-day. All right, and we're just taking a look at SPX. So what do we have here? We have consolidation. We have an attempted breakout. We did run these buy stops here. Okay, right at this level. Now what I want to see is we need to fill in that area. Okay, and then we need to break above here. So the probability of us making a move up here, breaking through, and then we also have to break through the 40-65 and the great trend line. So all of this is just a ton of overhead support or overhead supply, and it's just really, really sketchy, right? So you can front run it. I'm not feeling it, okay? Because what I would prefer to see is run these and then back test down and hold. Okay, now if you want to scalp it up until a certain point, sure, just have a tighter stop loss and do not give back profit, right? Because if you don't take your profit, someone else will. All right, so we're looking for a liquidation of these buy stops and then a liquidation of this area. Now, if we can do that, we've seen before that we have, right, ran prior areas of supply. Okay, but what always happens after? We always break back through, and this has been going on, right here. You can see, boom, broke back through. So we're looking for any kind of change of behavior. All right, so there's nothing here that's going to tell me that I want to get long and stay long until it can break through this trend line, back test it, and put in a higher low. All right, so how I'd be playing this is on the 20-day hourly. I am targeting this area here, right? I'm looking for a possible fade into the here, which is 39.62. And if we hit this area and make our way up, then my next area that I'd be looking at as resistance is 40.65, and then up to 4,100. Okay, taking out this high up here. So that's our swing high. On the weekly, 3-year weekly, right? So this is our JPM collar visualized. We can see that what we had an inside week and then we broke up out of it, right? So if you're following like the strat, that would be a 2 up. All right. So now your 2 up is likely to target buy stops. Okay. So now what we'd want to see coming into this week is a break above this high, which was 39.06. So a break above 39.06 is means for continuation up. And then we would target that 4,100 into this high here, which is 43.25. All right. Now I'm just trading price action. So I do not want to get into the business of predicting what will happen. I'm just saying this is what I'm leaning towards. I'm leaning towards we do go up a little bit, see if we hit that overhead supply and then get faded, right? And if we do fade that, I am targeting this swing low here and take this out. A low confirmation entry would be as you break structure. So right here, you broke structure. Jeez, why is that so big? It would be you broke structure, returned, right, to about 50% equilibrium, and then you faded. So right here, this is your high confirmation entry. So we're just at the beginning of the breakdown, in my opinion. All right. So, you know, you can ride trend intraday and still be wrong on trend long term, right? So we'd like to see that break. Let's take a look at some other charts while we're here. And let's just drop all these down into like a yearly and a 20-day. And we'll go with like a last 5 days, 5 minutes. Okay. So let's just start with end phase. All right. So end phase, we went short up here, right? And I mentioned on Twitter that we were targeting, right when we were at like 320, I said we were targeting the 230 level, and we have come down to 233.65. Now I covered my short way too early. But what I'd be looking for is at the 220 level, right? Because that's where the first breakout happened. So we'd get a complete retrace of that breakout. We're now below the 200-day moving average, and our point of control is at 295.29. Okay, so what I'd look for is if 230 is lost, we're going to target the 220, and then on a move up, we're looking at 239.56 into, oh, what is this 200 SMA on the daily? This is 245.79 into 252.45, and then all the way up to 264, and then 302.79. At 295.300 level, it gets interesting because this area here, right about 290, where the real move down comes, I'd at least be looking to mitigate that imbalance, especially when you have overhead supply right there. So mitigate that and then get out of the position. I would not stay long, and if you do, I would only hold runners. Right, we're still early in the year, and we need to be in the business of managing risk. So that's for end phase. Now, for a downward target, I mean, if it loses 220, our next real area is 176.63. At 176.63, I really do like taking this name long, especially in a like an IRA or a port that is fine with sitting through drawdown for a while. It's a great company. It's just it was really rich up there at 340, and I was raising red flags about it on Twitter. So let's take a look at Apple. Market doesn't move without it. Whoa. What do we have in here? Too much, man. Too much. Okay, so remember the purple line is that major dark pool. And I said anytime we get below this dark pool level, we do want to buy. And We do have what appears to be a double bottom down here at the 124.55 level. And now what we're looking for is a break of range, because we did, you see here, this low on, what is this date here? 6/16/22. So we did purge it, and anyone who was long there, but we really didn't see continued downside. So I'd be okay with taking a long on this on pullbacks and look for it to get back above that dark pool level. That is 135.43. So we're looking for 135.43. We also have this imbalance we left behind here at 133 and here at 140 with overhead supply at 142. So I don't mind that at all. And then your next area of overhead supply is 146.85. 200 SMA is 150.85. Okay. And this is a decent move down. So that's Apple. Let's take a look at Tesla. I've been beat up lately. So I'm in calls on this name, and I did buy a couple commons. I have way more bids down. As you see, it's coming down, and this is going to be a pretty big marker. So, but it is coming down. But look at this volume, right? That's pretty good volume there. We are seeing that the lower value area is 179.91, which is pretty far away, and then 248.16 is the 200 SMA, followed by, there's actually some supply right there. Okay, so I'm long the 150 calls for February 17th. Yeah, I'm down on those. Okay, but you know, it's just I wanted to buy shares, but I wanted to reduce my risk on it, so I'm comfortable with the position. Now, we have right about this 118 level. So let's break through 118, overhead supply at 122, break through that area here, and then we're off to the races to 149.37. And I am looking to scale out the second I get closer to the money. All right. Here's my marker size. All right. That's for Tesla. Let's look at NVIDIA. All right. So NVIDIA is at 148.59. We do have this area right here, right? So right around 160, we'd be looking to mitigate that imbalance and then possibly reject down. But there's not a ton of supply here. There's really not. So we could target 169.08, which actually coincides with the 200 SMA and the 1 year point of control. So not bad a look on that. And then on a pullback, we'd be targeting 143.38 and then 138.71. Okay, let's take a look at like Oxy. All right, Oxy has a 200 SMA daily rejection, 63.75. So we're looking to see if it can push through there. We'd be targeting 70.55. As you see at the end of the day, it had that double top, drop, return about 50. Let's actually see. Let's see if it was a 50% retracement. Looks like it to me. Let's say right there. So we had a return from premium. We had a return from a discount to a premium into a subsequent drop. All right. So that's not a good look. And what we'd be looking for is to run out these lows at 63.38 down into gap fill area starts at 63 into 62.59. And the point of control on the yearly is at 58.02. So this area here does not make me feel confident on any longs. If anything, I do think that we take this out and we would be targeting ultimately down to about 45, right? So if you want to take a short on this, 45, and then your stop would be right up here at 65 and maybe 66. Give yourself a little room, right? So yeah, maybe run with like a 50 put out until March, okay, with that upper area as your stop loss. And let's take a look at Microsoft. All right, Microsoft had a bit of a plunge right down here, 219.35, right back up to 225. All right, so quick thing I'm noticing on this chart is I do not like when we leave behind huge gaps. All right, so not saying that they have to be filled right now, but they will get filled eventually. And if they do, then 238 to 240, we're looking to possibly fade. Our our lower value area is 234. Point of control is 237, and 245 is the point of control. And you see how this has been rejecting the 200 SMA, rejected the 200 SMA here, and then couldn't even find support at point of control. So where the supply was sitting here, they were like, get me out of this thing. Like, and then gap down drop. It's not good, especially for one of the leading names. Let's take a look at like Qs in general. So Qs are at their lower value area. I like that, right? I like that it's showing strength here. This means that there are there's a like heavy demand here. And then as you can see, this major move up we had on the final day. But it's in the same area as SPY is. Like, we want to get rid of this area here, right? I want to see it get in here and then purge these buy stops at 275. Okay, because if it can purge them, I don't think it's going to continue and just rip right up, and you know, you might experience FOMO, but I don't see that happening. I think if anything, we just do a small little raid into here, right? And then when it comes down, we'll see if it can actually you know, show signs of life following the breakout. But it could just liquidate these guys and then head back down. I've been staying away from Qs personally. Let's take a look at fintech. Let's go with, I mean, Affirm and Upstart aren't moving at all. No point of checking that. Let's check out like Square. Okay, so Square, we went long commons at I think 54. So now we are looking to go flirt with 76.55, and our overhead supply would be 85, and then 106.79. Okay, the daily, I mean, it's just snaking, but if we're looking at a different time frame, we could take a look at this area here. Right? I mean, it's small. I mean, you're probably gonna get beat up on premium even trying to enter this for like a, you know, a swing on calls or something. But I'm long commons in this name, so we'll see where it goes. But yeah, it's kind of like the other fintech, really not doing much. Let's take a look at Amazon, and then we'll call it a day. Kind of same scenario, but I do like that action. I do like the spike in volume, right? So, I mean, if we're looking at, I mean, that's a major volume spike. But on average, right? If we're going to say this is our average volume, you know, this is just at least showing signs of life because we are holding the level. Like normally we're seeing spikes and then we're dropping. Actually, even right here, we can see where we had a volume spike, formed a low, right? Now we got relative equal lows right here, purged buy side, come back down, test it again. We didn't get any spring. There's no spring here. And then we did go on a little bit. Now, the people who were holding from here saw this, probably were waiting for this gap fill here. And then they got stopped out. So this is what I mean when I'm saying, you know, it's okay to take 20% or 50% or whatever. We don't need to be greedy. We can make moves on all directions. But what really does suck is if you get a perfect entry down here just to get stopped out a while later, right? And then to even get stopped out, maybe this returns back up and you would have sold for a loss and now you're back to break even. So this is the type of market where I don't believe the bottom is in. Therefore, if you're long and you're green, it's okay to take it. And I wouldn't hold it for longer than 4 to 5 days at a time. No way would you hold it for 3 weeks. Because we'll get an opportunity to see visually on the daily chart, like, okay, we have put in a higher low and we've held it and we've actually continued up. That's a change of behavior we're looking for. But anyway, I've had some people in the Discord. We've started doing the Apex funded accounts. If that's something you're interested in, it's down in the description. The coupon code is SAVE50. You get 50% off, or you can click the link, join the Discord. But you know, I hope you guys are able to stay solvent in this market and not get caught up in these trappy moves. All right, catch you next time.